Labor market week is here. So we've had a positive reaction to the labor market news that has come out thus far this week, alongside the Federal Market Committee meeting that was held today by Jerome Powell, and this has led to lower interest rates. This is all great news and positive things. So over the past few weeks, we've been saying first rate cut September 18th. At this point, again, it is still 100% predicted by the CME futures that the first rate cut will be September 18th. But we've been waiting for this week for the full confirmation, one from Labor and two from Jerome Powell. So first, we'll talk about Jerome Powell and the Federal Market Committee. We've had a lot of meetings over the course of the past 2 years, and even over the past 4 or 5 months, we knew that this market, the market may have its first cut in September 18th. But there were still 4 or 5 meetings in between those dates and now. So now, as of July 31st, there's no more meetings between now and September 18th. So this one was different. We wanted to see how Jerome Powell was going to react. We wanted to see what they were going to say in regards to a possible rate cut on September 18th, because it's only 45 days away and no meetings in between. And when the original data was released, they were really hedging it. They were saying, oh, hey, we want to see more confidence of inflation coming down. They were kind of shy. But in his press conference and in his review, he basically said that as long as they see the confidence, they could see a potential rate cut as soon as the next market meeting, which is September 18th. Again, we didn't really need that. We knew it was going to be, but the markets were going to react to what he said, right? It was fully baked in. But now with his reaction, it led to a little lower in the U.S. 10-year Treasury, a little dip in that U.S. 10-year Treasury, bringing down interest rates. So it's a great sign. And then you add that with the fact that labor market has come in a little weak again this week. So Monday was JOLTS, job openings, came in around 8 million, right? And the overall direction for the past 2 years has been down. And the 3-month moving average is around 8.1 million. So we're almost back to pre-pandemic levels. And that's what we've always wanted to see for labor. When are we going to get back to pre-pandemic levels? So JOLTS is almost there. ADP employment, which is basically jobs being added to the U.S. economy, also came out today. Was expected over 150,000, came in with a big miss, 122,000. So overall, 25,000 miss on only 150,000 prediction is a very large miss. That being said, the most important labor market print still to come out is this Friday. It is the BLS. We're going to see how many jobs are being added, and we're going to see the unemployment rate. The unemployment rate has been steadily increasing. We were at 3.4, then to 3.9, then to 4, then to 4.1. So we're at a 4.1% unemployment rate. Will that tick up? A very key factor. Overall, unemployment is still low. So if there's anyone out there saying, oh, unemployment's skyrocketing, it's not. 4.1 is naturally low. When you look at unemployment from like 1940 all the way up to 2023, the average of those 60, 70 years is about 5.7%. So it's a little difficult to kind of assess that because we just don't know what the markets are different between the 40s, 50s, 60s, and now. But overall, 4.1% unemployment is relatively low, but it has been steadily and gradually increasing. So Friday is still a big day. That has the potential to move markets. However, so far this week, we've added more ammunition, tons of ammunition, and all the confidence that we need, that we know the first rate cut is September 18th. Hopefully this, continues to happen. Hopefully we continue to get good economic reports for lower interest rates, which can help stimulate the mortgage economy. If there's any questions, please feel free to reach out to a Secure Choice Lending team member.